In this video, I want to talk about something that isn't gone over much and isn't really needed to go over much, but it's something you have to keep in the back of your head all the time. It's the higher time frame for the month. And since we're intraday traders, since we trade mainly the daily candle for at most 3 hours, or sometimes even, options positions for the week, we're rarely looking at more than price action for like a month or two if we have a bigger range, use the quarter of the year. But just in general, we don't really go above a month because I think the most important thing is understanding in the month the AMDX cycles, but through each week, you still get a reference of what is going to happen the next week. And that's something I've charted and I want to talk about because it really gives you the foresight of the market and how the market moves. And this is foresight that you're going to gain just over market experience and seeing how each month to month plays, because you'll see this pattern happen again and again, and on the daily cycles, on the 90-minute cycles and the microcycles this happens, and I use it to enter in off of and hold my trades longer for getting up to that 2.5 to 3 hour long holds from 9:30 open basically, or like 9:45. So let's look at the 4 hour. I have the monthly cycles. AMDX is the month, and then went back in my data and looked at each week. So first week of the month was AMDX, second was XAMD, and third was AMDX. And I want you to take notice of how this end cycle, we have accumulation, manipulation, and distribution continuing down. But then in our manipulation, which our manipulation low was these lows, there's all these lows. So in this manipulation, which is the not the lowest low, but I don't even know. These would be discount lows of the previous cycle range, of the previous monthly cycle range, but that's not important right now. What we're looking at is the last quadrant doing the movement that the next quadrant is supposed to do as well. So you see how we have AMDX, accumulation, manipulation, distribution. It's aggressive. It's definitely a lot of that range for the week, but then the next day, expansion like really takes us down. And then after that, we have expansion, accumulation, manipulation lower to create our manipulation for the month, and distribution in that same week starts us off really, really high. And then Sunday opening, like by the last 2 days of the week, we're already at what was close to our basically high week. So then come distribution, we're just continuing the movement of that accumulation, manipulation, and distribution and distribution. Now I'm sure that we're going to create probably some sort of SMT at all time high, but I was originally thinking we were going to be bearish until we broke this. So that's just showing you that the second week of the month is pivotal to understanding where our direction is going to go, because we had true month open, right? We had need for our major crack correlation, which was this low. I can pull up right here just on ES, which was this low. This is the crack correlation that we needed. We just had to wait for the right time for it to show up. And taking into consideration each week's AMDX cycles and this X being expansion lower and manipulation was next, it's hard to have the foresight for this because this looked like an expansion quarter to accumulation, then manipulation, distribution. But as you can see, true month opening, weekly, you have to pay attention to what price is doing now. So it's, yeah, you probably couldn't have found this out until this manipulation was created, that we were going to be in a buy model for us of the week. But still understanding that this would be MDX and expansion, we're expanding lower. So even accumulation, manipulation may be lower if this was, or X, A, accumulation would be just a lower movement since we expanded lower. So just using all these things you have, and we can move to the 4 hour to get more of a reference on how this works throughout the cycles, throughout the day. You can see that early distribution is like literally on time with that end cycle. You see how the movement picks up after this. Oh, really, after it was after this, but if you just pair the movement on the higher time frame with the cycles turning over, you can see the pivotal points that we have in the market. And this is especially in the 90-minute too. Like I also mentioned the 90-minute all the time. Right here was our reversal 10:30. Right here 9 a.m. 10:30. 10:30 here. We've been having a lot of late cycle days, which is AMD or XAMD. So the distribution is later in the day, which means that manipulation is also in like the opening price, so or opening for the third quarter, sometime in the middle of that. So then when you just move down to the lower time frame, it's about new weekly opening gaps. Let's put some of these on actually. New weekly opening gaps, how they play a role. Right here, using the inversion for an expansion lower. Here, true month open. This is like a pivotal sign. On this day, I took longs and I knew that our trend was shifting off of this. When I took longs here in this discount of the range, I actually really enjoyed taking that trade. It was a good trade. But like this just gives you such a great context. 4 hour, 1 hour, 90 minute, 30 minute. I don't use as much. I use 30 minute just for using the PO3 reference. That's the only reason why I have the time frame up. So that's really all I wanted to talk about. Very simple. Make sure you're paying attention to the monthly cycles and the weekly, and note that last quadrant turning over into the next higher time frame quadrant or whatever it's going to be, AMDX or XAMD. So pay attention to that. Daily, 6 hour, 4 hour, 1 hour, 90 minute. Those are like the only ones you need to look at for higher time frame. And really the 90 minute over the 1 hour, just because I like how it keys up with my model. And that's something I just use to chart at a more refined kind of level. So 90 minute over 1 hour, but just 4 hour. And so I've been using the 6 hour more. I trust it, but I think 4 hour is just better at the moment. So 4 hour and 90 minute if you want to get like real specific, but also looking at the daily is sometimes too much, but you get high time frame reversals that you can use to scalp at like the wick highs, the bodies when they're opening, and that's how you can get higher time frame weekly moves. But mainly we're talking about 4 hour and 90 minute. So thanks for watching the video. It was just short. Wanted to just adjust your mind to looking at higher time frames for the month and keeping track of it every week. Because like some people just go week to week trading and they're not really paying attention to the monthly cycle or the yearly cycle too, because that's important. It's important. It all plays together and it all shows you when price action is going to be the best. That's how the market works. So don't be so narrow minded and take a lot of data in so you can just trade better in general and know where the market's going, because you can know where it's going. You just gotta really, really work hard at it, and then it becomes intuitive.